Mercadona is a company of physical and online supermarket founded in 1977 with a presence in Spain and Portugal. Currently, it has a network of more than 1,600 stores and a workforce of 90,000 employees, all of them with a stable and quality employment. Mercadona has recently become the leading food retailer in Spain. Their business model is based on solid pillars that offer high-quality products at low prices, provide satisfied customers, generate long-term shareholder value, and implement measures to protect their customers. From 2007 onwards, the company implemented new initiatives to increase its market share. These initiatives were aimed at focusing on the needs of their customers in time of financial recession. The overall objective of Mercadona is to satisfy all customers' needs for food, housekeeping, personal hygiene, and pet care.
The balance sheet follows a quite standard organization. It is made up of the assets, the equity, and the liability. Assets are divided into non-current assets and current assets, ranked from least to most liquid. Equity and liabilities are divided into equity, non-current liabilities, and current liabilities. The liabilities are ranked based on their due date, with the ones with longer due dates at the top, followed by the ones with shorter due dates. All the numbers in the balance sheet are in thousands of euros. The biggest asset account is the intangible assets and property account. This is due to the amounts of properties that Mercadona owns, compared to the financial investments and other assets account, which is way smaller, due to the fact that Mercadona, unlike banks or other financial institutions, does not possess a lot of financial assets.
Now we will focus on the liability and equity section of the balance sheet. We can see that the value of current liabilities is considerably higher than the value of non-current liabilities due to the running nature of the business. Mercadona is first and foremost responsible for the cost of supplies, representing the major part of the current liabilities. Looking at the non-current liabilities, we can see that the provisions, here representing the liabilities expected in the future, are relatively low. The current ratio of 0.9 implies that the company might not be able to compensate the current liabilities with their current assets. However, what is not taken into account are the company's high value of reserves in the equity section. Those can fully compensate the current liabilities. We assume that those reserves embody the retained parts of the earnings for the last couple of years.
As we can see in the income statement, the total revenue of the year 2021 for Mercadona amounts to 25,560,952 euros. This revenue is mostly given by the product's profit margin, as well as the fact that the demand of the goods that Mercadona offers is very high because it offers good quality at lower prices than its competitors. As for the expenses, they are given by the sum of the personal expenses, 3,381,530 euros, as well as rent, property taxes, utility costs, and other part of it which was invested in the development of the app. Personal expenses consist in all of the costs and expenses related to contractor staff and personnel necessary for the execution of the work, and they are the most relevant expense of Mercadona.
The income statement is a financial tool which shows how profitable a company is during a certain period of time. According to the basic economic equation of the benefit, Mercadona during 2021 had a total profit of almost 700,000 euros, which means that had much more revenues than expenses, and therefore in 2021 it did not have to face any type of losses. Mercadona is one of the main physical and online supermarket companies in Spain, which means that the company has a large number of revenues based on its sales. And even though it has to pay an amount of 156,000 euros of taxes and nearly 24,000 euros of expenses, Mercadona continues having a great amount of profits.